Thanks for joining us for the next session. I'd like to introduce Daniel Major, CEO of GoviEx Uranium. GoviEx has been quite busy of late, putting out a new study on its flagship asset. With that, Daniel, I'll turn it over to you to kick things off.
Thank you very much, Chad. I appreciate the opportunity to present here at your Red Cloud event. We always enjoy the Pre-PDAC and normally enjoy it in situ in Toronto with a cold beer, but we'll do it the more traditional way we're now all finding to do it via the web link. So yeah, GoviEx Uranium, there are disclaimers. We are very much an Africa-focused uranium company. We are very much a development-focused company as well. We have two key projects. They're both permitted and ready to go. And we've accordingly adjusted our board and our management to focus on development rather than just continued exploration. We focused on getting our projects ready for development, for simplifying those designs, to shortening the timeline on the feasibility studies. And we're now looking at the next steps that we have to do to accelerate the project financing and the offtake contracts. But even though we're development focused, we do recognize that we have a lot of exploration upside on our properties. We turned our drill rigs off back in 2013 because we already had a very large mineral resource out there. But these deposits have a lot of upside potential still and scalability. It's all about getting them going first, generating cash flow, and then taking those opportunities in the future. And then lastly, I'll just take you through this presentation our Falea project. It started as a uranium project. Incidentally, the company that owned it back in 2007, Rockgate, was valued at $300 million itself for this one project at the time. As I said, we're Africa focused. We are in mining jurisdictions. Zambia obviously recognized as a copper play. Mali is now the fourth largest gold producer in Africa. And Niger has a long history since the early 70s of being a uranium producing jurisdiction, with known export routes out of there. With that comes skills. We have 100% local content on our employees in Africa, and we continue to maintain that approach. But importantly, because these are mining jurisdictions, the governments and their mining codes are very focused towards mining development as part of their GDP development. I will briefly go through the market. I'm sure there will be others presenting at this conference who will give you their views as well. But in a nutshell, if we're looking at the demand side, we're looking at a WNA forecast of about 3% per annum growth. This is driven predominantly by the known reactor builds that are out there at the moment, with the propensity coming out of the Asian market. We also are starting to see a change in rhetoric from governments who are increasingly looking at nuclear as being part of the overall green agenda, as it becomes clearer that to do it without nuclear is almost impossible. And recently there was a report from the EU that highlighted for some of the countries in the EU, it was physically impossible to go for renewables because they actually didn't have the land space within their own countries to build the wind turbines and the solar panels that would be required to go net zero. And so nuclear, given its high amount of power in a small place, very much becoming part of the play. We're seeing that in the US and in Europe. If we look at the demand side, I think the best way to the supply side, if we look at that, the best way to describe that really now is to look at it as an inventory shift. The thing that has dogged the uranium price for a long time has been surplus inventories in all three of the stages of our industry, whether that's secondary supply, primary supply, or inventories at the utilities. The producers clearly have cut their inventories. We've seen the production cuts early on in the stage, and then starting from 2017, we saw Cameco, Kazatomprom, make the substantial cuts that they have done through MacArthur River and the reductions in Kazakhstan. COVID has then had that impact. But now what you're looking at is an industry that really does not have a lot of supply side inventory. And that's been adjusted even further with Cigar Lake still down and with Kazatomprom selling additional material to Yellowcake, again, reducing its own inventory that it has. If you look at the secondary market, obviously the conversion price going up, the enrichment price already going up as well, are telling you that inventory is disappearing from there. The fact that the requirement for Metropolis to restart is telling you've got a capacity squeeze on conversion. And more recently, I heard 10x, the Russians, indicating that within the next 5 years, they will be running out of secondary material to do their conversion on and will require primary material from that point onwards. So secondary material is getting squeezed in the market. And then lastly, the utilities. We've already seen a sharp decline in utility inventories, particularly in the European market, but also in the US market. 2020 saw underbuying by the utilities, so expect 2020 to report another big shift down on inventory levels. And even at the beginning of this year, we have a very quiet market, hence the nervousness in the price. But expect those utilities to come back. They still have to make their spot purchase to cover their contracts there, and they've still got contracts that will need writing. Longer term contracts are becoming more and more uncovered, and mines are becoming near their depletion. Many people will talk about Cominac closing in Niger. In 5 years' time, probably Somalia will close as well. Ranger has closed, and even Cigar Lake by 2028 is due for closure. So we will need much higher prices to justify the reload of new projects or restarts that are required to drive this price forward. If you look at GoviEx, we're all about development, trying to come in and fill up that gap that's going to become more and more expanded as that supply deficit ekes away. We have the 2 projects already permitted, really trying to get Madaouela away first at 2024, and then Matanga following it on afterwards. Madaouela, we own 80% of it. The government of Niger owns 20%. It is in the middle of the Sahara Desert, but fortunately, it is next door to Orano's existing operation. So all the infrastructure is there, people who are trained in mining uranium, water, the roads, power, all available to us right next door. We have just put out a new PFS, very much focused on updating our project, focused on simplifying it, to focus on getting it debt financed. These were all what we were looking for. We were trying to get that project ready to be development ready, to make it easier to go through the next stage of the final feasibility study, and to make it easier for us to go through and cover the technical sign-offs that are required from the debt financing, and then to bring in the offtake and the equity that's required on the project. So it has the potential already, we believe, to service the kind of debt levels that we need. We're now moving into that final feasibility study stage. As I said, accelerating on the financing and the offtake options to drive it to the next stage. And then we have Matanga. Last year was a quiet year for Matanga as we had problems with the Chirundu license. The government in Zambia canceled 850 licenses across the country. We appealed. We have had a very positive response from the Ministry of Mine, who's indicated that subject to some additional information, which we have provided, he will give us the license back again because he agrees with our arguments in our appeal. So we're imminently expecting that to come back to us. Matanga is a very simple project. It is low capex. It is slightly higher opex than Madaouela, but it's an 11-year mine life out there producing similar volumes as Madaouela. But again, its key is simplicity. It's an open pit heap leach operation, low strip ratio, low acid consumption. So very easy to get this kind of project up and going. And again, all the infrastructure is available where we are in Zambia. And then our last project is Falea. It started as a uranium project and continues to remain so, but we have gone into gold exploration on this. And the reason for that is that our Madini license, which is the one on the presentation with the number 2 and 4 in it, has no real potential of having uranium in it because the geology is not right. It doesn't have the sandstone layer above the greenstones, which are colored green in this presentation, between the laterite layers. So we felt that rather than just give up on a license, let's try and extract value for investors and our shareholders. And that's where we really turned to the gold exploration and realized that we actually had one of the major gold trends coming down through our property. So we are currently drilling there at the moment and expect to have some results out in the next month just to show whether that upside potential is there that the gold soil sampling has presented. At the end of last year, we also did some additional work because the guys who owned it before us, Rockgate and Denison, hadn't really pushed out on the uranium exploration. And what we note is there's a good correlation between the IP in the top right figure and the uranium. And clearly there are other targets that have never been drilled. But this property comes with copper and silver in it. And we really wanted to understand what was driving that mineralization into the uranium. And so we did IP, bottom left-hand corner, which showed a big IP target. Clearly, that is the source of whatever's been pulling the metal in to the deposit. But at the same time, we took an opportunity to see where copper and other minerals were coming from by sampling core that had previously been unsampled below the uranium deposit. Did about 10% of the property. And interestingly, right on that connection to the IP on the road fault, we were coming back with gold results. That's very similar to the gold trend that we see sitting up here above that deposit as well. So potentially two gold trends coming through. This is a property we will do some work on to figure out what the next stage is, and potentially it's a divestment for us so we can focus on our uranium properties. Most of this slide is as much as before, but I would like to highlight we've recently changed our board. We brought on Selma and Eric Kraft. Selma has a background of debt advisory, particularly mining projects in Africa with Societe Generale. She currently runs a large business doing cashews out of Cote d'Ivoire. So very much an African file, understands Africa, understands financing of mining projects. Eric Kraft has a background in the mining industry also, but the shipping industry as well, and the finance industry. So we've been strengthening up our board, getting ready for the next stage as a project. We're currently at the end of September, had about $3 million of cash. We raised money at the end of January, about 8 million Canadian, and we've seen warrants being exercised in the last month. So we're well cashed up, somewhere over 8 million US at the moment. We continue to have Denison and the Cameco as shareholders. Insiders are currently sitting with about 10.4% of the company. And more recently, while Ivanhoe Industries, which was a multi-shareholder company, has now consolidated all of its shares under Robert Friedland himself. So we have some good names on the register. From a value perspective, this is very much really trying to replicate what's happened in previous cycles as our arguments. Can we go from being a developer to being a producer? That was the driver in the 2004 to 2007 cycle. The companies that made the most investors were those that achieved that target. And then the 2011 cycle, it was the companies got taken out in Africa, particularly where investors made their best return. So clearly we are a development company. We're in Africa. We're trying to achieve certainly the former. And if the latter target happens, then obviously we'll hope that is also great for all shareholders. And then lastly, really, we do believe very much in the uranium market, the strength of it. Nuclear is no longer verboten, but on the other side of it, supply has still got to catch up with where demand is going. We are a development company. We're very focused on that. We've built the team together and we continue to strengthen it. We have those permits. That is key. We haven't got to wait months or years to get those. We're ready. We've got the projects to a point that we can move them fairly easily through that final feasibility study, and are now thinking about how to get these projects financed with the rising uranium market. So I'd like to thank you for taking the time to listen to me. I'll turn it back to Chad.
Thanks, Daniel. Great overview. We do have a few questions come in from online. So the first one, not surprising, just kind of the climates related to operating in Niger with respect to COVID, and just kind of in general developing a mine in Niger. Any comments you could provide?
Yeah, one of the benefits of being in Niger is that mining industry. I mean, we can pick up people who've been working in Orano's mines with a lot of experience very, very easily. So, you know, our workforce is there. Niger, you know, is obviously seen to be part of the Sahel, but very much it's a on the border issue. The greater Niger is very quiet. We've been there since 2007, had no major issues as well. On the COVID issue, Niger has pretty well just shut its borders. Getting in and out is quite difficult. We've had no impact within the country, and our people can move around relatively easy. So Niger is a great place. We, as I said earlier on, we commit to this sort of 100% local employment, and we're glad to do it in Africa, and we have the skills around us to be able to do it.
That's great. And then I know your PFS has had a lot of historic drilling involved, a lot of engineering work done. I mean, what do you need to do to take it from a PFS to a full bankable feasibility study?
Yeah, I mean, there's really three key roles left to do. One, because we'd already simplified the plant, there's some final optimization test work. We don't need to do a big pilot plant. We just need to optimize the consumables and work out what the best mix of chemicals is to make it work. That's relatively easy. As referenced before, we do have to do the infill drilling on the Miriam deposit to just prove up those moly grades that are in there. We were really waiting to spend that money when we knew where we had the project to just drive and the market to drive through. It's not a lot. It's about $1 million worth of work. There's about 100 holes that need to be drilled. We know the uranium's there. We just need to verify that from a resource point of view, the moly grade that we're using is acceptable. And then finally, it's really just down to the detailed engineering. But I would say in the last PFS, for example, most of the major components in there were bid on multiple bids. So we went out to get at least 3 tenders on every single major part of that project as well. So there's already a lot of detail in there. And we really just have to go back and really know what color do we want the ramps and those kind of things, conversations, get to that last detail. And obviously, like any project, it's getting that logistics story right, understanding how you're going to get stuff in, how you're going to get delivered, the timeframes, those kind of things, the detail.
Great. And I guess one question highlights that the price you did your study at was obviously higher than markets. I already know the answer to this, but could you maybe comment on that relative to the landscape?
Yeah, absolutely. I think the key thing is the market needs prices at those kind of levels to justify the projects that need to restart. If you look at all the restart projects out there, there are very few projects that are ready to go at those prices now. There are projects out there who say they can do it for less, but they're way off their permitting and will need a lot longer to get there. And by then, the gap in supply demand is going to be a lot bigger anyway. And if you listen to some of the commentators out there, even with projects out there that can come in at lower cost, there is such a big supply deficit that we all need to be coming into the market anyway. So we're very comfortable. And there are projects way higher cost than we are. So we're very comfortable with that 55. We think it's a very reasonable number for where we think the market's going to go.
Right. Okay. Switching over to Philae, it's a two-part question. Copper, uranium, gold. These are IOCG. You don't say IOCG anywhere, but obviously it's early days and you're just starting to drill. But comments there. And then second part of the question is, as a potentially gold project, is there anything with the licenses that would prevent you from spinning out that asset at some point into a gold vehicle?
Yeah, on the IOCG question, we have an internal discussion on that. I try and avoid that because I'm a mining engineer. I'm just going to blow it up anyway. So I will never commit to that. But yeah, I mean, it is, and this is the issue. It is complex. And while the previous guys focused on the uranium, there is clearly a lot more to be had there. And we're surrounded in a gold belt by all sorts of other projects. So it would be, wrong of us just to avoid the other metals and try and understand where they are, and maybe there's a bigger build that needs to be put together. Regarding the licenses, no, we have already got what's called Group 2 and Group 4 licenses. So Group 4 is uranium, Group 2 is the precious and the base metals combined. So because Philae already has uranium, copper, and silver in it, we already have the Group 2 licenses. So we're already covered. The complexity, probably, just to be a bit of detail, is that Medini only would really, I can spin that one out easily as a Group 2 license. If we're trying to deal with the Philae license, then obviously it's a bit more of a mix. But we would always want credit for our uranium project that's standing there anyway.
Right. That's great, Daniel. Always appreciate your time. Congratulations on getting your study out, and we look forward to future news.
Thank you very much, and thanks for inviting me on.
Thank you.
Take care.